seconds, 3 miles.
请联系乘务员。女士们、先生们，感谢您的关注，祝您旅途愉快。
NASA 557, contact tower 128.15. Maintain spacing interval 90 seconds. No closer than 3 miles.
Approaching minimums. Minimums. 100. 50, 40, 30, 20, 10.
Over the past few months, 8,400 troy-ounce gold bars, or more simply put, 100 tons of gold bullion, were carefully transported from the Bank of England's vaults in London to Poland. In what should have been a slow news week for precious metals, this Thanksgiving 2019 was anything but. Eastern European Union nations, like Poland, are now going out into the physical gold bullion market and buying large tonnage lots. Poland has just taken almost half delivery of their official gold reserves into deep Polish central bank storage. And other Eastern European nations are doubling down on their own bold gold delivery rhetoric. Reported this week, former Slovak Premier Robert Fico, who has a shot at returning to power, urged his parliament to compel the Slovak central bank into bringing home UK-stored gold reserves as soon as possible. Why? Sometimes your international partners can betray you, Fico said, citing a 1938 pact by France, Britain, Italy, and Germany allowing Adolf Hitler to annex a chunk of what was then Czechoslovakia. And more recently, the Bank of England's refusal to return Venezuela's gold bullion over political differences. Fico said Brexit and the risk of a global economic crisis put Slovak gold stored in Britain in a dangerous situation. Poland obviously agrees with Slovakian Fico, partially simply judging by their actions. Now you may be asking yourself, how much does 1 ton of gold bullion weigh, and how much is 1 ton of gold worth? A ton of gold weighs 32,150.7 troy ounces per ton, and a ton of gold is also valued currently at over 47 million fiat US dollars per ton. Just over 80 of these 400-ounce gold bars that you see make up a ton of gold bullion. Hello SD Bullion YouTube subscribers, my name is James Anderson and this is the 4th gold price market update from sdbullion.com. I'll leave a link for you here on YouTube so you can dig deeper into the 100-ton gold bullion shipment story, which was recently executed by G4S, one of many secure logistics providers, non-bank bonded and insured custodians we often work with in the high-volume investment-grade bullion industry. Mixed price action this week for the 4 major precious metals. The silver spot price finished flat, just over 17 per troy ounce. Similar to the gold price, moved sideways, finishing the week at 1,466 per troy ounce. The spot platinum price ticked up a few bucks, finishing just under 900 per troy ounce. And the palladium price hit a new all-time record. Physically hard to procure industrial palladium bullion bars have taken palladium prices seemingly record high after record high this entire year, 2019. Palladium is up over 37%, or about $500 per troy ounce from the start of the year. Palladium finished the week now priced over $1,850 per troy ounce. The gold-silver ratio remained flat. It still takes around 85 ounces of silver to get 1 ounce of gold bullion. Given the holiday this week in the United States, the median well-paid nearly 20,000 employees at the private Federal Reserve did not bother to update their Fed ballooning balance sheet data. But the New York Fed's repo loan program was active and busy. They managed to still loan out over $400 billion in overnight loans for the week. Since middle September 2019, the New York Federal Reserve's trading desk has been intervening into the overnight bank loan market. They've now lent to some of their 24 primary dealer investment banks and financial houses a sum of over $4 trillion with a T, fiat Fed notes, since the repo market bailout began. Turning back to the derivative gold markets this week, news out of Bloomberg shows that some entity or high net worth investor placed an option bet That will pay off big time if the gold price goes from where many believe it is destined to, while at perhaps a faster pace than many believe currently possible. Headline reads, bold bets that gold could triple to $4,000 trade in New York. Respected gold industry peers and colleagues have speculated the possibilities of this bet range anywhere from wild bullish speculation, with a more than 700x payoff if the price is indeed struck in time, or perhaps a bullion bank requiring a gold mine to procure this option to keep financing and financial insurance costs in line during a sale. Or others have respectively stated that $4,000 an ounce gold by June of 2021 is way too far out of line for that conservative explanation. Again, the spot gold price is currently just under $1,500 an ounce as we near the next decade, 2020. Possibly someone somewhere has some deep inside knowledge of what may be coming down the financial road. Either way, what may be to some a gold bug clickbait headline is in reality a $1.75 million bet that could pay off over 1.2 billion fiat US dollars. Financial tweet of the week begins with Bloomberg's Twitter parakeeting TARP bailout assistant to Hank Paulson, Minnesota Federal Reserve Chief Neel Kashkari's new claim that monetary policy can play the kind of redistributing role once thought to be the preserve of elected officials. The FinTwit tweet of the week was then executed by the notoriously critical Rudy Havenstein's Twitter account, who stated, "The Federal Reserve has for many years played a major role in redistributing wealth upwards at Neel Kashkari." Judging by Credit Suisse's high net worth investor trends and plus $50 million estate data, the disparity of wealth between haves and have not too much has never been higher and wider. And if you've ever bothered to look at the data, you would clearly see the Federal Reserve's policies ongoing since the 1980s have exacerbated this wealth disparity problem. Do not be fooled by their sudden claim to care about poor and middle-class U.S. citizens. By their actions, the Fed effectively does the opposite of any mandates they claim to uphold. And finally, to close this week's major precious metals markets updates, I want to give you the chart of perhaps the century. Well, at the very least, this currently is the lowest in over 100 years of time that we have seen commodity valuations versus the Dow Jones Industrial Average. In other words, the cost of real inputs that we need to keep the global economy running not been this cheap versus the arbitrarily chosen rotating larger stocks traded on U.S. equity markets. If often the goal of successful investing and speculating is to buy low to eventually sell high later, well, institutional commodity and natural resource investment firm Gothring and Rosenzweig has a quick 10-minute video covering their belief about the future gold price. The guy in the video, who makes the presentation, you can find a link in our show notes this week. His name is Lee Gothring, and when gold was $250 an ounce in the year 2000, people thought he was crazy when he called for a gold price target of $2,500 an ounce in Forbes magazine. Remember, that was right in the midst of the first internet stock bubble. Here we are in another crazy stock bubble. And we also have record debts. We also have huge unfunded liabilities that no one knows how we're going to pay off, other than perhaps defaulting upon or debasing. I'm not going to tell you what he says in this video. It's a short presentation. If you have interest in precious metals and the resource sector in the coming decade, I suggest you go find it and watch it for yourself. Click our show note link below to chase it down. Hey, thanks for tuning in. If you liked it, be sure to like the video. And if you haven't subscribed to our channel, do that. And also hit the alert button so you don't miss these market updates as they come along. Give me a comment below. Let us know what you think and what you'd like to see more of. Have a great weekend, everyone. Thanks for tuning in.